Welcome to TradeTheMBI.com. This is John. This report is for the 18th of July. Well, consistent with our weekly suggestion that the buy signal was in when everyone was talking gloom and doom at the very peak here, the rising shorts have just fueled the continued new highs. So as long as we see that rising and still holding on to our ABM values, we've had no change. It's pretty consistent with, reaching our high. We returned to the 50%, which we know is popular for institutional buyers, and boom, it drove price to the highs. You still hear about people having exited the market in record form, and yet you're making new highs. Well, that's, like I said before, going to be something down the road. It'll fuel even further expansion because of the need to match returns. Pretty consistent here with the NASDAQ holding on to, again, the ABM yellow and just bouncing right back to the peak. And just, easy to call shakeout moves is like they bring it down a little bit and right back, but it's been very consistent with either the positive extremes or just within the normal ratios that we look at. Within this, we've had the euro reached its 50% mark, and of course at that particular point rejected right off of it. We've never had the dip below the red line. We had it from back over here, and then once we crossed back over in that, it still hasn't given us anything that's going to bust out. However, the declining highs of the Morganacci have lifted this, just hit the natural which one was going to come first, the 100 or the 50%, and in this case the 50% hit, rejected off that a little bit. Still not bad from an extreme histogram standpoint. You're just not getting any action in the no spark zone, not even oversold from the standpoint of the DOC going below the negative 13. So still caught right at the top side of the range. If it breaks back into the range, which I still think is very possible, we'll see some added declines to the euro, and that's just going to be a reflection of the problems that exist within the EU. As far as bonds go, it's an interesting one because now we read about the massive selling the Russians did of all of their treasuries and completely sold all U.S. treasuries. It's always been a question of whether or not the Chinese would do the same. It's a little different because the Chinese have such a strong trading presence they really need to maintain some dollar liquidity as far as treasuries go. So I don't know that they have the freedom that the Russians did with the sanctions and everything to eliminate U.S. treasuries and move into other things, which theoretically should be gold. In their case, oil is also another one. And it's a dangerous game when you want to play with them, given their connections with OPEC, and that they really, even with the U.S. Ability to be a top producer, and that can cause major disruptions in oil markets, and that resulting in significantly higher prices. The Saudis have helped ease that big bubble up here right when it got to the peak, and they were talking about it. It took 4 or 5 days, but when they recognized that it actually was going to happen, we've had a little bit of an ease off in pricing. Still not that dramatic. I mean, the reality is you're still quite elevated overall. You're going to have to see a significant return all the way back down to these lows before you would think that things are getting a little bit softer, at least from inflationary pressure purposes. The interesting part about that too is with the gold continuing to struggle, and we kind of expected these new lows to be taking place. It was funny because we saw the basing of the crypto Bitcoin here right around that 6,000 range, and it had come tested several times, and even from our daily chart we can look at it as it approached the 23, and once it cut support there, we started to see the turnaround beginnings of some buy signals, and that's really propelled it here all the way up to the 75 range. Even if we look at the daily chart of it, which just has now got enough data to really start forming something, you can see started to get the GAMs coming in here with these dips below with the orange, and then right down here we ended up with right about this point just before we got the green, and we dipped low right there at the 23%, and that's 66, and boom, shot right up to the 50% level. So some added impact into cryptos. Be interesting to see if we start to see a spread towards gold, because as they've risen, gold has typically fallen, and that's we certainly saw an exacerbated case here. It's just this general belief that inflation clearly doesn't exist, which is quite interesting given what we've actually seen from real inflation numbers in the Fed's description of a strong economy. Of course, with a strong economy, equities are the place to be, and you're not so worried about being in gold unless you see some kind of stagflation develop. So what we had here was a nice little basing move that came down. We ended up with our orange dip down here, and right about that 23%. We started to turn positive. We got up to the 76 with the gold candle, and of course it did make the hundreds, and then it just kept going from that point on. I mean, the shakeout never began to fade, and we stayed with cyan below red all the way until, well, right over here was the first dip, but we started to see the beginnings of it peak out, and this is what I always tell you to look for, is this algorithm activity pops here to the extremes, and it started doing it all the way across the plane on here, and even at this most recent peak. So clearly you're seeing some activity, and it's been mostly to the sell side because we started to see DOC fall throughout that. So whoever acquired down at the bottom rode it all the way through, and they've been starting to liquidate within this most recent pop. That doesn't mean it can't continue to carry through. It just means that we're seeing that they are, in fact, exiting that as we make higher highs or the same highs on much lower shakeout. In fact, we're dangerously close to potentially moving to a negative shakeout situation, in which case, something to bear in mind, we've got the low right here at 2802, and then a series of positive extremes begin all the way from 0575 going up, and it shouldn't be too hard to follow. It just, one of these things, when you get into this nice bullish move, you've got to be careful just randomly shorting everything when you know that you have a weekly, a daily bias all pushing in one direction. It's going to take a little bit of a change in those readings before you start to see carry through to the short side. You'll usually just get small down drifts. In this particular case, with the rising lows, we would expect to at least get to the 50%. The question will be, where will the 50% be by the time it's done? Probably pretty high up there, at least probably over 2810 or higher. So it'll get close to where the well, it's already past the positive extremes from the lower side of it, so probably somewhere right up in the mid-range, and that would be normal to have at least some kind of a downdraft that's going to fill some of these back in. So we'll see when that takes place, but it should just be a matter of seeing a significant spike along with the DOC spread. We do have cyan over red now pretty consistently in this particular case. We just haven't seen a breakdown of the red into any of the lower zones. So we're going to get a little more range. We'll continue to work with that. For now, it's pretty good performance mid-month, and I think that's just the advantage of being able to take care of weak players. You no longer have the big boys in there fighting it out as much with the vacation time that they usually take at this part of the year. So, and things running smoothly in the economy. And until that changes, the general bias is still going to be upside. So we'll just take it from there. As always, though, trade well, and I'll post any relevant charts as needed.